CDR and FYI, as Attila said, we track durable CDR transactions orders that are occurring in the marketplace. We aggregate the information from public announcements, from registries, from marketplaces, directly from suppliers, directly from purchasers. We reconcile it across the different parties and then report out on the information. So hopefully we've got a relatively complete view of the market. There are cases where some purchasers hold on to their information and only publish it at a later date, but we believe that we've got well over sort of 90% of the market that's occurred. We provide a number of different tools and resources: partner portal, map, events calendar, a CDR calculator. If you are interested in exploring further about the space, map is particularly useful if you're an investor and you're looking for particular projects in given areas. We recently conducted a lot of the data you're going to see and information is going to be out of a year in review that we conducted recently. We also completed a pricing survey in partnership with Opus, as well as a market survey in partnership with Silvera. So there's a lot of different intelligence that we're drawing upon and analysis in addition to the data that we have in our database. Overall size of the market grew in 2024. And obviously as an investor, this looks like a pretty healthy growth curve. It's the kind of thing that you'd want to see from any startup in your space. And obviously you feel very pleased about the growth of the market overall. There are some sort of caveats that we will get into, but it's a 78% growth over last year. To Chris's point about engineered removals, is if you want to have capacity down the road, you need to be investing in it now, because there is a learning curve, there is a scaling curve. And if you actually look at the estimate of somewhere in this neighborhood of 6 to 10 gigatons of removal by 2050, we need to be growing at a cumulative annual growth rate in the neighborhood of 40 to 50% per year for the next 25 years in order to get to those kinds of numbers. So these kind of growth numbers that we achieved over the last couple of years are definitely on track. And the ideal obviously is that we continue to be able to maintain that going forward. A lot of the purchasing, and as I mentioned, there are some caveats around this growth, has come from a few large technology buyers, and in particular, Microsoft. So much of the purchasing has been driven in the US, much of it from technology companies, and as we can see, Microsoft being the lion's share of it. So Microsoft, over 60% of all purchases to date, cumulative purchases in durable CDR, and in terms of last year in particular, again, 5 of the 8 million that we're talking about. Frontier, which is an advanced market commitment, includes Google, Shopify, Stripe, H&M, Autodesk, and a number of others. Came in second. Google, has started to figure more prominently. All 500,000 of Google's purchases were last year, so it's nice to see that they're coming online. And there are others, that were relatively sizable last year. But you can see out of this 8 million total, there's only 5 that are over 100,000 in volume. So there is definitely a matter of concentration at the top that we are seeing in durable CDR. If we actually look at the numbers taking out Microsoft, it's still a growth story, which is great. And it's still sort of an on-track number. But this is something that we definitely want to be monitoring going forward. The last sizable purchase that Microsoft made was 500,000 tons, excuse me, from 1.5 in July of last year. So really in the latter part of last year, and when we look at the volumes, it has been other purchasers stepping up, and yet to see this year how much Microsoft will purchase. So it's important to diversify beyond the Microsoft purchase to other purchasers in the market for us to be able to continue to sustain the growth going forward. And there are some positives around that, which I will get into later in the presentation. In terms of number of unique purchasers, it goes back to the theme of need to increase the concentration. The total number of purchasers actually grew 7. Unique purchasers only grew 7% last year. So if you look at the 2023 number, the number of purchasers versus the 2024, that's only a 7% growth there. For the ones over 100 tons, it was a 22% growth. Nice. But as you can see, the number of purchasers is not keeping track with the volume increase. And so what we're seeing is a greater volume of purchases by a smaller number of purchasers. And what we want at this particular stage is to bring more purchasers to the table. In terms of sectors, I already mentioned technology is pretty prominent. This is in terms of numbers as opposed to volume, and that's why it looks different. Financial services is the greatest in terms of the number, but they tend to be relatively smaller volume purchasers. Software and services, fewer of them, but tend to be higher volume. Professional services is quite high as well. And what we see is that a lot of these purchasers, what's driving them is that they tend to be higher margin companies, and they typically have like a vested interest in the growth of this market. In addition, they have progressive employee bases who have more of an interest in being more climate friendly than some of the others. And so, this shows up here, what are we looking at? It's technology, progressive employee bases, also high margin companies, financial services. You need to really understand CDR if you're going to be able to trade in it. In fact, I was just actually on a call earlier this morning with a bank, and what they mentioned was, we need to understand this industry. We're educating our clients. We buy, for potential resell down the road, and they absolutely see this as a commodity, if you like, that will be traded down the road. And so it's very much in their interest to start getting into it now. Professional services, there's large practices from, McKinsey, BCG, a variety of others that are developing their sustainability areas. And so getting involved in purchasing is also important to them. There are other purchasers that show up as well. So energy companies definitely have involvement. Equinor, for example, was one of the largest purchases in 2024. Occidental purchased 1.5. Shell Environmental Products has been active. I would say that all of the major, maybe not all, but many of the major petrochemical and energy companies are taking an interest in CDR, whether it be from perspective of offsetting or whether it be because they have the capability to pull things out of the ground and equally have the capability of putting things back into the ground. And specifically CDR for geologic sequestration is, a potential area that they can get into. Aviation is another sector where we're seeing a lot of interest. So Airbus, ANA, American Airlines, British Airways have all figured. Skies 50 actually was, one of the largest purchasers last year, and they are a special vehicle, if you like, for purchasing CDR for the airline sector. And then, outside of sectors, Japan has been very active in terms of their GX and that's leading to some Japanese companies taking a lot of interest. So I think we're starting to see that it's starting to go beyond that, core that I mentioned of the, the Microsofts and the Googles and so on, and it's starting to get into other and seep into other sectors and countries for that matter. And we'd like to see more of this going forward. So what is the primary reason why the purchasers are getting involved right now? It's typically because they're looking to support the early development of carbon removal, but it's also investing for the future in terms of like building relationships with CDR suppliers. In some cases, it's about securing tons, but it's, if you see here, get started, learn more about the industry. So there's really a sort of let's get to, this is going to be big, and let's get in now and get educated about this so that we are in a better place going forward. So anyone who's getting involved, I'd say at this point, is being proactive. And we are going to see a transition from the proactive ones to the ones that, let's say, are followers or, getting the guidance that, hey, you know what, you really should be starting to take a look at this. Pricing is going to come down and is going to need to come down. I think if you talk to suppliers, they will tell you, well, let's keep the prices up as quick, as long as we can. And that is totally fair because, as Chris mentioned, again, there's a technology scaling curve and some of the costs in the early days are definitely higher at lower volumes. But purchasers do want to see lower prices. And so we did see a decline in pricing across all methods, and this is based upon publicly announced pricing. But there is still a gap. There's a gap between, there's a decline, so again, declined across all of them except for mineralization and biochar. Actually, there's increased competition for the biomass, which has led to actually an increase in biochar pricing. But across the methods, it has gone down. But there's still a gap between what purchasers are looking in terms of price to pay and what suppliers are. And that's a gap that over time we'll need to see come down in sort of breadth, if you like. Suppliers, if you recall the purchaser number, I mentioned that went up by 7% across the board and 22% for over 100 tons. Suppliers grew 16%. Sorry, a bit more than 16%. I apologize. Suppliers with at least one order grew, yeah, 16%. Sorry, got the number right. 16% from 2023 to 2024. So there's also growth there, but I would say that the number of suppliers and the financing, which I'll get into in a minute, there is a concern about a supply constraint. And I think suppliers, there's only so many in the market right now. We're looking for more purchasers and more demand signals. As we get more of those demand signals, we would expect the number of suppliers to actually increase. On the positive side, deliveries have absolutely gone up. So a common question we get about CDR sector is, well, there's all these sales, but what about deliveries? And you can see actually deliveries have grown at a higher pace than purchases, which is a good sign that as we start to get more of the deliveries and we start to deliver on, again, the technological sophistication and maturity, that as these numbers grow up, it will become increasingly real, if you like, for the sector. And it won't be as much in terms of forward deliveries, although there will still be that for years to come, for a few years to come, but a little bit more of the kind of like realization of the promise and the credits that, that purchasers are going to be looking for. Number of different sort of methods. I won't go into this chart in detail. Some major sort of suppliers, Stockholm Exergi and Ørsted, which are both based in the Nordics and Sweden and Denmark, respectively. BEX, both of those are sales of BEX forward purchases to Microsoft, securing against future delivery starting in sort of 2030 type of time frame. I mentioned earlier that investment, and if you think about the supplier number, investment actually declined last year by 30%. And back to my point about demand and suppliers and the number of suppliers, I think until we see this number increase, the number of suppliers is not going to really increase significantly, because at the end of the day, they require funds to grow their operations. But hopefully we'll see an arresting or a change in this trend. And I'll give some reasons why we might see that in the near future. On the positive side, the investment activity has been largely, if you look at, the colors to the left, if you like, are on the earlier stage of companies across different methods, and to the right is later stage. And so a lot of the funding that we saw actually went into early stages. And so while the overall funding declined, it was actually across a greater number of deals, as it turns out, and smaller in nature. So there's a little bit of a spreading of the bets, and hopefully we will actually see some of these come to fruition in the next few years and create greater opportunity. There's a number of different projections about where the market is going to grow. One of the ones that we consider to be particularly credible is this one from BCG. This does not show to 2050, it shows to 2040. And there's, as you can see, low, medium, and high scenarios. The left number is the number of tons, megatons, removed, and the right side is like the approximate size of the market. So, a high scenario, say 200 megatons to 870 megatons in 2040. Again, compare that to a 6 to 10 gigatons by 2050 is the number that we're trying to get to. Important to remember, this is an exponential curve. So even sort of in the medium scenario, while this looks way off, a 6 to 10 number, and it is certainly I think on the low side, it's maybe not as bad as it looks. There would be an expectation that this would be growing by at least 50% a year for the following 10 years as well. Yeah, and so this is the kind of like ending slide, but I do actually want to leave like 5 key bullet points, I think, that are actually about the market. So number one, long-term 46% CAGR to achieve the 6 to 10 gigatons removal for net zero goals. Number two, market initially driven by seed purchasers such as Milky Wire and Frontier, and then accelerated by Microsoft, Google, and the sector-specific players that we talked about. Purchasing has been primarily driven by the US, and again, specifically the tech companies. That phase has come to an end with the US administration. We can continue to see purchasing from US companies, but let's start looking for other sources of purchase beyond the US, given the new administration and their anti-climate tendencies and stances. So what's the big unlock? a big potential for the next phase of growth are the standards bodies. SBTI is coming out with a round for feedback, and there are, thousands of companies. I think it's over 8,000 companies that are signed up and provided some sort of pledge or commitment with SBTI. Anybody who's following SBTI guidance has zero incentive currently for purchasing durable CDR. If that is included in SBTI guidance going forward, it will be an unlock for the market, which will lead to significantly more purchasers coming in and will not only increase the unique purchaser number, it'll lead to an increase in the supplier number, and it will be a strong underpinning, if you like, for increased investment in the sector. So we do consider that. There's other policies, intergovernmental standards bodies and policies that are being looked at, but that I would say is the most important thing as an investor to be keeping your eye on over the course of this year.